started. Do you want
Yep.
to go first? Or do you want to go?
Um, right, week one. Who the hell are we and how do we know each other?
The basics, right? Gotta
Yeah,
get that nailed.
okay. Um, who are we? Well, we're pretty much, I'm just a pretty standard guy. How do you describe yourself? Um,
6 foot, what is it? 6 foot,
no.
175 pounds, blue eyes, blonde hair.
Barely. Uh, yeah. Um, how
So I
would
guess
you
where
describe
we'll
yourself?
start from is, I mean, we used to swim quite a lot when we were younger. I used to swim for City of Leeds. Lewis used to swim for City of Bradford. Um, when I got to about 14, maybe 15, I moved over to the City of Bradford, and that's the first time I met this lovely chap here that I'm sharing the screen with. Back then, we probably didn't really see eye to each other. It wasn't really till maybe 6 months, maybe a year in that we actually started talking to each other and getting on quite well. Um, Swimming kind of ended for me when I was maybe 16, 16 and a half, just before I went to university. And since then, I've always kind of kept in touch with Lewis for text messaging or whatever it has been. We've not seen each other as much as probably we should have done over the years, but whenever we do, it's kind of just slips back into things and the click gets on really well. So, uh, with regards to what we're doing, so we both, maybe in the last 2 years, 2016 we started maybe, we
I think
had
it's
an
a little
interest.
before. Yeah, maybe 2015, I think.
Yeah, 2015, something
Yeah.
like that. We decided that we'd, had enough of the money just sat in the bank, really, not really doing out. We had a little bit saved up for a rainy day, and the main reason I started looking at stocks and shares was because the oil market was currently in a crisis. I'd just graduated in 2015, and I think oil had slumped down to maybe $27, around $30 a barrel. And I know from my personal experience, it was really difficult for me to, even get a response back from any of the oil companies that I were applying for in order to work as a chemical engineer. So that got me thinking, maybe it's probably a good time to look at the market there because oil kind of normally goes in cycles from what I've seen and read in the past. It bounces to make go up to $100 or whatever, then there's a bust cycle where everyone's suddenly flooding the market with oil and it drops back down.
Boom and
So
bust.
yeah, boom and
Yep.
bust. You know how it goes, the standard sort of stuff.
Well, yeah. So yeah, I guess I came from from talking to Dion, came from a similar kind of background. Was graduating a degree, not, guess struggling to find a place to start a career. It's always slow to start, but
For sure, for sure.
got there in the end. Once the ball got rolling, I pretty much decided the only real way to make some good money was to invest it. You're never going to make, well, from what I've understand and read so far, you're not going to make yourself rich by working for someone else. So one way of doing that is to invest what you can. Um, and rich doesn't necessarily mean absolutely loaded, rolling down the street, throwing money out your car, but
Mm.
it certainly can put you in a much better financial position than you're in right now. And kind of taking a long view, a much longer view towards investing rather than trying to get rich quick,
Yeah, for
which,
sure.
yeah,
I think a lot of people, when they first look at the stock market, they kind of look at it as a bit of a gambling sort of Wild West, Wolf of Wall Street kind of arena,
yeah,
when really it's not. I'd say stock market investing is probably you're investing in something there if you're looking at it long term, and by long term you're looking at 5 years plus realistically.
yeah, definitely. I think even a 5 year is probably the minimum. Like,
Yeah.
you probably want to look at that and say, okay, what's my 5 year plan, and then you readjust from there, type of thing. So
Mm, mm.
certainly that's the way I've looked at it. Otherwise, unless you've got quite a big bankroll to experiment with what I understand is day trading, um, you're probably going to struggle to, I don't know, you probably all your profits would just get eaten up by,
Commission fees, yeah. When you buy and
yeah,
purchase a share, you got to
yeah,
pay the brokers X amount of money, and it's just going to get lumped up.
Yeah, just erode all your profit from trading too quickly. So
Yeah. So that's how we got into investing anyway. So we started in 2016. It's been about 2 years now. So gradually over the time, I've gradually increased my fund size in my portfolio. I'm still only in stocks at the moment, but Lewis also has some other stuff going on the side.
yeah, so I don't have as big a fund as I would like in the stocks, mainly because I'm trying to save for a wedding at the same time. So
We
money goes two ways. Um,
certainly does.
so yeah, I guess I'm trying to take a long approach view to the investing in the stocks and shares. Hopefully that compound of interest and dividends will build that fund up.
You know,
Um,
just
and
getting your foot in the door, really, getting that experience, isn't it?
yeah, essentially what money I could spare as opposed to what money I could, if I was really trying to skimp and scrape and save in there, I could probably put more away. But certainly I don't miss the money that's in the stocks and shares, so I kind of
No.
treat that as it's already gone. That's for future me.
Yeah.
Um, yeah, also experimenting with property as well. So again, much longer term view for returns, but some steady returns on that in the short term. Again, though, in the short term, got stung by the tax. Not too big a hit. I was lucky that I'd kind of preempted it and was able to kind of write it off in my fees, I guess. And yeah, I guess I'm looking at a kind of 10-year view on that.
Yeah. Fair enough. That's that. I'm also looking to try and push forward into spread betting in the near future. And at the moment, I'm just saving up a small pot to start with that. I don't want to rush in too much, too quick, because from what I understand, a lot of people go in there not really knowing or having a strategy and basically just gamble the money with regards to which direction they think the market's going to go. Obviously, with spread betting, you can short stock as well as predicting on it to go up, and usually spread betting's over a much shorter time scale compared to stocks and shares. I mean, you're probably looking at a maximum sort of length of maybe 3 months to a year, and then your minimum can be anything from a couple of hours if you're a day trader. But I don't think I'll quite be getting into that yet because you'd probably have to quit your day job.
Yeah, I mean, from what I understand, it can be very lucrative because there's a lot less fees as it's considered gambling. Um,
Yeah, you don't even get tax on it, from what I understand.
yeah, well, you don't pay tax on any gambling winnings,
No, no, it's true, you don't.
but yeah, that's certainly a market of interest that I'll be researching over the next year, looking to experiment in, possibly further after the wedding.
Yeah, once you can actually commit some solid funds to stuff after the wedding.
Yeah, I think it's a much riskier game. As I say, it's like gambling, but if you
If
if you
you
got
got a strategy,
a
you got a
little bit of
strategy, and you
strategy
manage your
and
risks.
yeah, that's it.
That's the main thing.
Yeah.
You don't want to be throwing it all on one trade. Now it's more to do with the percentage fractions that you're willing to risk and lose. So if you do have a bad run of maybe 3 or 4, then you're not completely out of the game. Whilst if you're going balls bare every time, then good luck, good riddance, mate. You've had one bad one, you're out.
Yeah, yeah, and it can take you out much further than what you put up as well, can't you? Because you can,
Oh yeah, yeah, because it's only it's not a margin, is it? It's yeah, I think it is a margin you put down for the initial deposit, and then if you let it roll, the bank will ring you up and say, right, we need that other 50 grand that you've lost.
yeah. Or on the contrast, if you'd earned or won 50 grand, I don't know what the terminology is.
I'd say made,
Made.
probably. Yeah, banked,
Yeah. Well,
profited. Fair.
profited. Yeah, I guess that's the risks
Yeah,
involved. But yeah,
I mean it's a different topic really, isn't it, altogether?
it's certainly something that I want to cover in detail if we can. So
hmm
we're gonna talk about that one week down the line.
Yeah. All right.
Uh,
So next
yeah.
thing is I guess the main thing is what people want to know, why are we started investing? What got us into investing? Why do we want to invest? So I think we briefly touched on this maybe about a couple of minutes ago, but for me it's to gain a bit more control of my finances. I feel like just leaving it there to rot in the bank with a piss poor interest rate at the current moment is just it's frustrating to see it essentially decline in value when you take into consideration inflation. So for me, it's about taking a bit more control, putting it, investing in, getting some better yield through dividends and capital growth. And it's more exciting, isn't it? You know, you've worked for that money, you've been taxed on that money, and now you want that money to work for you to make even easier money.
Yeah, I think that I guess that's the reason I want to get involved in it is I weren't really taught about it too much.
No,
I knew you had to put money aside from your salary, save for a rainy day or whatever it might be. But my understanding of it or my upbringing was you put that in the bank and the bank has paid you interest.
yeah,
What you realize quite quickly when you do start looking into it yourself, you get a better understanding that actually that's far from the way you treat your savings. Yeah, it's good to have a little bit of spare money that you can call upon quite quickly.
mm,
Then you can look at kind of longer term investments. Not so much these days, but ISAs in the past have had good interest rates. I remember having ISAs
yeah,
that were
cash ISAs, yeah,
yeah 6-7% sometimes if you locked it up
mm,
for long enough. Nowadays they're down at like 1 or 2%. So I
yeah.
guess
I- that's. You've also got to remember that in the last couple of years, how the game's sort of changed with regards to how the ISAs have developed. Because I think maybe 4 or 5 years ago, you couldn't actually buy stocks and shares with your ISA account; it was exclusively to cash only. But now that they've opened it up to that stocks and shares, it gives you a lot more flexibility to maybe prod into that little bit of risky markets
yeah.
whilst having that comfort if it's the long term and it's not locked up. You could still take it out whenever you wanted, while some cash ISAs you have to be in for a fixed term.
Yeah, I guess that's not news to me now, but I guess yeah, not so long ago I wasn't aware that that was a new product to market as such. I always thought an ISA was, you essentially locked up your money for your fixed term,
Yeah,
whatever it
your
was.
three, your
So
3 years, yeah,
yeah,
3 years at
th-
six
three
percent
to
or whatever
five
it was.
years, yeah. But I mean, since those plummeted, and I mean it is a few years ago now. I think people use them less and less. I don't think there's any real benefit to locking up your money for that
No,
length of time. So,
no,
yeah, that was my
not for
interest.
them
Is
trash returns. No.
exactly the returns you're giving up essentially. Even if you got 2 or 3%, by the time you've had inflation on that, you're getting 0.5%
Yeah.
interest. And I mean, at that rate, you'd rather just go spend it. I think most people would.
Well, I think yeah, definitely most people our sort of age as well. Like with regards to when you got other commitments that you need to pay off, overdrafts, debts, and all that sort of stuff, it's more difficult to see the longer term future. So I
Yeah,
guess that's another thing that we're really looking at with the why we're investing. It's the compound interest effect. You start when you're 20, you build a little bit of a roll, get your dividends in, and then if you reinvest them, obviously it snowballs over years. And if you start in your 20s and then by the time you get to your 60s, you'd like to think the snowball will be pretty big.
yeah,
Whereas if you started in your 50s, once you've had, a little bit more wisdom on your shoulder with regards to how the world works, and maybe someone's introduced you to this, or your pension advisors advise you to have a look at it, you're not going to get as much compound interest, and your snowman's not going to be as big as someone who started in the 20s.
yeah. I guess I mean my background is kind of well, I can't kind of educate myself on money as a whole, not just on interest, not just on savings, but just how to deal with debt, how you leverage debt. Um, we kind of have this opinion that all debt is bad, and that's not necessarily true, or so I'm
No.
learning. Yeah, I guess I want to delve into that a little bit more and understand that. Um, there's businessmen that can, leverage their debt to great, achieve great things, and there's people that take on debt and just don't know how to cope. So there's obviously a disconnect somewhere, and from what I understand, it's education, and no one else is going to teach you it, so you got to
Yeah,
teach yourself it.
for sure. It's the curiosity. You don't get
Yeah,
taught it at school, do you? I mean, it's one of those things. And I think now the information's so easily available
it's not
because you can use the
necessarily
internet.
easily available, but it's definitely more readily available than it has been in the past. I think
Yeah,
you still have to
you have to sift through shit to
yes,
find stuff,
there's a
good
lot of
stuff. There's
misinformation out
always
there.
going to be that. Yeah,
Yeah,
there's always
and
going to be the biggest.
yeah, I think that's definitely a clear point to make is don't believe everything you read.
Yeah.
I don't know how many times we'll say
Someone's
that.
yeah, if someone's trying to sell you something, then you should really start asking questions.
But then, they're trying to sell you a book. So
Yeah,
don't take everything as gospel, but certainly build up a bigger picture of what you need to understand. If you get two books and they've got two conflicting statements in there, it might be worth buying a third. But but
on this hand it says this, and
they
this
normally
one no.
trend towards the right information or trend towards more correct information, which is, you can only then take that advice and do with it what you will. Um,
Yeah,
and I
that's
guess
the
that's
main
what
thing.
I'm
Putting it into
trying to
practice, I
do.
guess.
Yeah, definitely. Just you can have a lot of knowledge and you can advise friends, oh well, I heard if you buy stocks in this, they did really well, so it's a good buy. But did you do your own research rather than just jumping in on what someone else told you? Because
Yep.
you'll probably lose.
Yeah, yeah. You might have just been pumped and dumped, but that's something else.
Yeah,
So I guess the next thing is we've been in for about what 2 years now. What do you think the main lessons are that we've learned so far?
I think it's
Do
very,
you want to start this one off?
yeah, it's very, very easy to get emotional about money. Um, and money in all senses, like it's probably the one of the main factors or one of the main causes in stress. Stress in relationships, in family life, friends when someone owes you some money or you owe them money, it can cause just
Friction, for sure, can
friction
cause friction.
everywhere. So I guess kind of taking a little self-ownership of your own money, um, and just trying not to be emotional about it. I think that's
Mm,
that's one of the best things. It is
yeah,
literally a tool, and if you start thinking about it in that context, it makes a huge difference to how you
for sure.
treat your money. Um,
And then you'll quickly find out once put your first sum of money into some stocks and shares, if you do choose to go into that route, you'll quickly find out that how your personality reacts with regards to whether it's going up or whether it's going down, how often you're checking it, whether it's fluctuating, or should I sell now because I'm 10% up and I've got a small gain, or should I hold on? Do you know what I mean? Like you find out a lot more when you actually see it working, as opposed to just sitting it in the bank and you're not really thinking about it. But when you actually can see the numbers going up and down, and I often find especially particularly the first year, I was really, really distracted. Like, and I would get too attached to it, and I'd be like, "Oh shit, I'm down 30% here." Or like, I was up 45% last month, and I'm down at 30 now. Like, how does this even make sense?
always wondering like, oh, should I sell?
Yeah,
Like,
itchy
yeah,
fingers triggering
yeah,
over thing, and that's what they want you to do because then they rack up then commissions with regards to the buys and sells that you've got to do.
yeah,
So I guess one of the main things that we've learned is try to ignore the daily turbulences. Otherwise, it starts to affect your mood and attitude. Um, the numbers don't lie.
yeah.
If it's down 10% one month and there's no information out there or new information that you can read up on, then if you're in for the long term anyway, then I don't think you really should be bothered or worried about the weekly dips, dives, and turns.
Yeah, there's definitely that kind of thought process of was it riding it out? Like,
Mm,
there's going to be ups and downs in the market, but the general trend is upwards. And you hear that in films, but
yeah,
always in Hollywood, it's always kind of you know pushed to the very limits, isn't it, to make it an
yeah,
emotional story, and that's what it is when
yeah.
you see
Well,
it
that's
in
what
a
it is, isn't
film.
it?
Yeah,
It's holding your nerve, backing yourself. You've done the research. You know it's good.
yeah.
It's just holding through it when you're sweating it out.
And I guess if you were willing to I guess risk a little loss, or if you're willing to put that money aside, you could always take that risk. But it's about balance. Like, you don't risk
Mm.
everything on making a quick win when.
Unless, of course, you're really experienced and you're skilled and you know exactly what you're doing with that front. But if you're
But then if
going
you're
in new,
experienced and skilled, you're probably not kind of
experienced and
emotional,
squirrels.
experienced and skilled. Then you're not gonna be emotional about it. You're gonna know
Yeah.
what risks to take, and you're not going to risk more than what you can lose.
No, no.
I guess that's one of the main stories.
Yeah. So yeah,
or
like we just touched
letters.
up on
Yeah.
there, you don't want to go in blind. You want to do your research. For example, well, I'm invested currently in a moment in a company called Cirrus Minerals. So basically, what they've got there going up there in the North York Moors, they're building a tunnel to extract basically polyhyite. I don't even know how to pronounce it. Polyphor is what they call it, their product, and it's a really good form of fertilizer that they believe it's going to. The mine life is maybe 100 years on, can last for 100 years. So it's not currently commissioned. It's not producing anything yet, but they're currently building it. So we've been in here for maybe 2 years now, and they've gone through quite a lot. And believe me, there has been some absolute roller coasters of a ride with regards to this stock. And it's definitely been a learning experience. Maybe I should have top sliced when it was good, took a little bit of profit, and then put it back in when it dipped back below my average price. But I've done the research. I mean, like when you think about it, there's going to be a food shortage coming up in the next 50 or 60 years with regards to the population increasing and yields of crops are going to deteriorate with climate change and all that sort of stuff. So
Well, the
if this
basis behind
fertilizer
the
is good stuff,
fertilizer,
yeah,
yeah, is that
yeah, improve
it's
the in yield of crops, yeah.
yeah, and then in turn that'll feed the kind of crisis
It's,
that we're
yeah,
not going to have enough food to feed everyone on
yeah.
the planet.
In
So
simple terms, it's supply and demand, and
yeah,
it really everyone needs food, and then fertilizer improves the food yield, so therefore this fertilizer is going to be in demand. So that's why we kind of jumped
that's
in.
the basis on that one, isn't it? And it's the
Yeah,
other thing is, they like you said, they have had some ups and downs, but essentially they're pushing on because they know they're sat on a future gold mine. Essentially, it's not gold that they're mining; it's fertilizer. But you know, the demand for fertilizer might be greater than gold one day. So,
yeah. So I
uh,
guess it's finding little niches like that that you
yeah,
think is going to be good business. And then, for example, maybe if you think electric cars are the way forward, you might want to look into mining companies that are mining lithium or battery metals.
yeah,
Alternatively, you could look past that and think, well, electricity cars are not really the future. It's maybe going to be the hydrogen economy, and you might want to look in hydrogen fuel cells companies. It's stuff like not seeing the game now. I suppose it's trying to look 5 years down the line and say who's starting that development process now and almost getting in early,
yeah.
and then it
I guess
really
it is,
tests your
isn't it?
nerve, doesn't it?
Yeah, I guess it's a little bit of forethought with you think, yeah, this company is going to be big one day, but that one day might be in the towards the end of your career. So if you put in a little now, it'll be worth a lot more then. Um, I guess
But it's just like just hot, just riding it out, isn't
yeah,
it?
yeah, and I guess that's uh, you're taking that risk, but what else would you have done with that money? A lot of people my age would have just spent it on alcohol or you know,
But I mean, even saying that, like you can still do that stuff, but just don't blow it all. Just put a fraction away each month. Like you got to have a little bit of discipline in this game, aren't you? Like with anything, you need
yeah.
to
Do you
say,
really
right,
need
I'm going to save.
9 pints?
Do you? And do you need to go out Saturdays and Sundays?
Yeah,
No, probably not.
yeah,
I mean, like if you can just put away even 10% of your salary a month, or even five, like it'll eventually start adding up.
yeah.
And then if you get experience and you do your research in other ways to make money from your money, then compound interest says it's just going to keep building.
And I guess the other thing there is like anything new, you're probably gonna get it wrong a few times.
Oh yeah, for sure. Like you're not going to come in straight away and just hit all winners. Like
So like
you'd be
don't
deluded to think
yeah,
that.
you can't let
Don't be
that scare
disheartened.
you out of it at all.
No,
Like
no.
you cannot the- like one of the main things I guess in any walk of life is you just have to keep trying at it. It's certainly something that's going to be affecting our generation. There's
Mm.
going to be a huge kind of demand, isn't there, for well, I guess it's just that you understand what your money's doing, where your money's going, and you
Uh,
know you're not
as
relying on someone
opposed,
else to do it.
yeah, I'm not relying on the bank's overdraft at the end of the month to say, right, here's 500 to tick you over, but we want it back at end of next month, and then you're still going to be in the same circle. It's breaking out of that circle.
Yeah, and if you can break out of that with taking small steps,
Mm.
rather than
You
trying
will.
to do giant leaps straight away, if you
Yeah.
just chip away at it.
Yeah. Speaking of small steps, what we've also learned so far is dividends. Dividends are essentially when the company makes a large amount of profit, they will essentially take a portion of that profit and they will split it out of the number of shares that investors hold in that company on the stock market, and they will pay a portion of it out. Usually, you'll pay maybe you can see some companies currently on the FTSE, they'll maybe give you a 4% dividend yield for the year. So essentially, if you put £1,000 in, um, that would be what, 40 quid a year you're
Yeah,
getting.
yeah,
So obviously, it doesn't sound like much, like 40 quid. What's that? It's not even a night out if you're going hard. Well, yeah, fair enough, it's not. But it starts off as 40, doesn't it? And if you let it build and you keep adding money into it, then you eventually your dividend pot gets bigger. I mean, at the moment, my dividend pot's maybe just shy of 600 a year at the moment, which is pretty good. I mean, obviously, I've built it up from 30, 40 pounds a month,
yeah.
30, 40 pounds a year, sorry, and now it's up at 600. And that's not bad, man. That's like what you could say that's a cheap holiday if you really were going balls bare,
Yeah, I guess
scalping it out to Amsterdam or something like that.
yeah, you could definitely get away on that sort of money. That's if you wanted to extract that each year. That's the other thing to talk
Yeah,
about is if you
yeah. I
took
mean,
that money out, you could literally have your holiday paid for year on year on year.
mm, yeah,
Um,
yeah,
and or you could reinvest it and let it,
stick it back in.
yeah, compound.
Yeah, I
And
mean, like if you can get 600 in 2 years just from investing a little bit, I mean, like by the time I'm 30, maybe I'll have a couple of G's flying my way every year just from dividends, which sounds all right now, doesn't it? Now we're talking a little bit.
yeah, well, it certainly is. I guess that was one of our early ambitions,
Yeah, one of
I'll
our
say.
little girls earlier on.
Yeah.
Yeah,
So I proposed. Sounds like a stupid idea when you
yeah,
say it out loud, but it's
ambitiously,
very ambitious.
ambitiously proposed.
Basically, imagine if you could invest enough money over quite a short period of time into some high dividend paying companies. And imagine those companies were going to pay you, and you could kind of strategically place them so that you got a dividend paid each month. And then imagine that that dividend was equivalent of the national minimum wage. You'd essentially have a salary um, that's apparently livable. Questionable
Yeah,
statement, but
if
um,
you're living in a very cheap place to live.
yeah, it's yeah. But imagine having that and not having to go to work. Like
Oh, I mean, that'd be nice, wouldn't it? So
it's
currently, if you
it
were
would take a lot of
to get
stress
that
away,
minimum,
wouldn't it?
yeah, yeah, it definitely would. I mean, you could even get a part-time job there, couldn't you, and just supplement it if you were really
Struggling.
getting
Yeah, yeah.
cush. But I mean, to hit that target now of 14,500, I think is minimum wage, is it?
Yeah. I think is that the other.
Yeah,
I think there's a
yeah.
few
So
flying
you'd
around
need
these
a
days, but
if you were going for a portfolio that were giving you a 4% return each year with your dividends. I mean, that's only £362,500 that you're putting in
so it sounds like a
only.
big number. It really does.
It does sound like a big number at the moment, but
Uh,
if you keep chugging it in, it'll rock up.
yeah, I think to get to that number, you have to be quite aggressive in the early years and certainly let it compound
Yeah.
for
Well, I
a
mean, the
couple
big
of
the
years.
big thing is if that Cirrus Minerals comes in, that's and then starts paying dividends. Like you've been there before it were dividends when it were an earlier bit of a
So
gamble of
you
stock. You know what I mean?
essentially have a lot more shares than what it would
Yeah.
cost you to buy in at that point.
Well, your yield's a lot better, and instead of having a 4% yield, you might have a 17 or a 20% yield, which is ridiculous when you think about
Yeah,
it. But I mean, it could be there.
yeah. It's always an option, and I guess that's
Yeah.
that's half the reason we take the risk on the smaller companies as well. Is
Mhm.
um, they when you do buy in on a small company,
When you, yeah, when you find them gems,
yeah,
you might get a bit of trash. You might get a fair, nine out of ten, you might get trash. But if you get that 1 out of 10 that's turns out to make it, and like if you're making a 20% yield on that yearly, that's like 5 years, and you've pretty much paid off your initial
yep,
investment.
yep,
Easy.
and it basically makes your initial investment look tiny, like.
Yeah. And then like the price as well, if it's paying dividends, maybe going to be 10 times what it was when you first bought it anyway. So
Yeah,
it's a
yeah.
win-win.
And I guess that's worth all the risk along the way, because if you can put that money aside, you're not losing anything, you're not missing any of it. It's
No, no. It's just going to look nice when it comes out at the end of it, like with an extra couple of zeros on the end of it.
yeah, yeah.
Buy
Definitely.
you a couple more beers instead of just them 10 that you got on Friday.
Yeah, you could buy the whole family
By
beers.
the
Yeah.
bar.
Yeah, definitely. So, right, if we've talked about where we came from, we talked about what we learned so far. So we'll talk about what we want to do next. Yeah.
Yeah, yeah, okay. So I don't know if you're aware of the tax year and whatnot, but it's recently at the start of this month it turned the new tax year, so you can get your new ISA allowance in. I've currently got a LISA and an ISA account open. So what a LISA is if I put, you can put £4,000 in a year into a LISA, and the government will give you 25% of whatever you put into that.
So that's in the
Um,
UK only,
that's in the
but
UK
yeah,
only, yes.
just in case there's anyone else watching this. But
So yeah, so that then can be built up over time. Obviously, if I do that for 5 years, I've just got 5 grand free from the government just to stick in my stocks and shares account, and I can just put that in a 4% dividend there, and it'll build it up. But the catch points on this is you can't take that money out unless you retire at 50 or you're buying your first home.
so I think
But
yeah, it's a little bit more stringent. So you can pay into that until you're 50 or
yeah,
55, I can't remember.
yes.
But you can't draw it down until you're 60. Oh, it's like
But
5 years
yeah,
after.
well, you can draw it down, but you essentially lose 25% of whatever you've got in there because they'll penalty. It's basically a penalty saying all
Yeah,
the government's
yeah,
funded it for X amount of years, we're taking back as cut.
yeah. So I guess the LISA is it's again the versus reward. It's a very safe way of getting some free money.
Free money, yeah.
Yeah,
And if you're not bought an house yet, then it's a great way of saving for a deposit, I guess, because that
definitely.
extra
Yeah.
couple of grand in each year is definitely going to help it up, and especially if you're good at investing, because you could spin that up like that if you knew what you were doing with it.
Yeah, if you know you need to be saving for a house, certainly in the next 5 to 10 years, that's certainly one of the
Mm,
better options out there.
yeah,
If you have got that kind of money spare.
yeah. So anyway, since we got sidetracked, so I've just thrown some more money into that LISA account and my ISA account. Currently, my portfolio, I looked at it maybe a month ago, and I wasn't particularly happy with the split that I had with regards to what I would class as more blue chip safe stocks with regards to compared to maybe sort of opportunistic stocks that are going to get you big capital gains. So my current goal is to try and maybe not even that up, but make it more comfortable for me to say, well, if a couple of my main adventure ones go tits up, I've not lost a massive portion of my portfolio. I've got the backup there with regards to some blue chip dividend stocks that are gradually going to be
Yep.
trickling in. So that's for me. Currently, some excellent yields out there. I mean, for example, a couple of days ago, I think I stuck some money into Aviva, the insurance company,
Yep.
massive company. I mean, it's big, it's slow, it doesn't move too much. It's fairly sort of steady around the couple of levels, really, I guess. But that were up at 7% yield, and for a big company like that, it's ridiculous,
Pretty
really.
safe bet. Well, I say safe as
I'm going
in
to say, like, look at
there's
Carillion. I mean, that
there's
were pretty safe as
yeah,
well.
safe is um not
There's less
risk
risk.
free. Yeah,
Yeah,
it's towards the safer end of the scale. It's not
yeah,
completely
perspective.
risk free.
It's a blue
So
chip. It's a blue chip stock for a reason, isn't it?
I tell you what, we need to stick some terminology up here so that people can understand what we're talking about. So when we say safe,
Yeah,
we're not
that's
saying
that's
it's
what we'll do.
secured
So
and no
yeah,
losses. We're saying it's towards the safer end of the scale or the spectrum.
spectrum. Yeah.
And yeah, um,
Next time, mate, we need to get like a little sweaty PowerPoint presentation that we can just throw up there, and we're like there with a little cursor and Matt was saying, "Oh yeah, so this is a golden cross, this is a dead cross, and this is what it means, and blah blah blah."
well,
And
you're
maybe a
gonna
bit
have to
more
teach me that
visual.
because I don't know the details of that terminology. So, so
That's
I'll
what.
let you put that PowerPoint together then.
Well, it depends what we're doing next week for
Yeah,
next topic, doesn't it? Really, but I mean, like,
yeah,
yeah, PowerPoint's definitely going to help. But today we're just an introduction.
yeah, definitely.
So
I think we'll fire
yeah,
through that one.
as well as the LISA, what I also want to do this year is I kind of want to build a little pot to go into spread betting, but I'm well aware that if you go into spread betting with for example, with only £1,000 or maybe £500, it's very difficult to make any sort of worthwhile progress at them sort of levels simply because the risks that putting in. You know, like if you're only risking maybe a percent to 2% of your portfolio each time you do a spread bet, then like a percent of what 500 is
Talking about
is
five,
£5, isn't it?
five
You know what I
grand.
mean? Like that's the
Yeah,
maximum you have to lose on that trade is £5. That's spread over your winnings. It's you're gonna have an absolute barnstormer of a 10x
yeah.
in order to get 50 quid.
But I guess
So
what you're trying to do there is, if you do use that £500, you're just going to use that as a test.
no,
No?
I want to start with a decent amount. I want to maybe put, maybe 5Gs, or if I can get up to 10, great, but I don't think realistically 10, I can put away 10 in a year, maybe five. And then that's that's my tricycle. I've got my training wheels on with that 5 grand. I'm going to learn with it. I'm not going to go silly buggers and throw it all around. I'm going to, do the 1%, maybe 2% of risk trade, spot the trends, look for it, not go silly buggers, not get itchy feet, not get itchy fingers, and just start betting all over the place. You're
Yeah.
going to work it up systematically.
So, like, obviously, you're talking about that spread betting as well.
Mm.
Like, when do you think you'd be ready for that?
Well, it's one of those things you can read as much as you want, can't you? But unless you put yourself in the situation, you don't really know how you're going to react. I mean, it's like everyone says, oh, well, if you see a mountain lion, you're supposed to stand up and make yourself look as big as you can to scare it. But
Mm.
realistically, if you're walking down the street and you suddenly saw one in the street and you have that response of, holy fuck, that's a mountain lion, what do I do?
Yeah,
Are you suddenly going to think, oh, yeah, I remember reading in a book once about 6 years ago, I need to make myself as big as I can and make a noise? No, you're either
yeah.
going to pelt it or you're going to just freeze. So I guess, yeah, building that pot up and then just going in with stabilizers, accepting that I might, lose maybe 80% of the trades. But if I'm only losing 8 out of 10 and I'm only losing a percent each time, that's 8% I've lost on my total portfolio. So it's like, it's not the end of the world, is it?
So I'm not really sure how that works. Like, I haven't even read. Well,
Yeah.
I think I read one page once online about spread betting.
Yeah.
That's the extent of my knowledge
Mm.
on it. I know, is it PIP, which is a percentage point or something like that?
Yeah, I think you use pips more for Forex
Is that
and
for Forex? Okay.
commodities. Yeah. While it's like stocks and shares, it's usually just pence, point movements. Yeah.
Okay. So yeah, that's about as far as I understand that. But certainly want to do some reading over this next year.
Mm.
And I guess, yeah, hopefully you'll feed me some information as well to help guide me.
I'll send you some stuff.
Yeah.
I mean, what do
What?
you want to do? What do you want to do next, man? Obviously, you got the
Um.
wedding next year, so it's all
Yeah.
geared towards that. After that, you can maybe start thinking about throwing a little bit of money into some investments and going a little bit more ham with it.
Yeah. So I guess my main focus this year is to try and not spend too much money on the wedding. I guess I'm
Much to
coming.
Amy's demise. She didn't hear that.
Yeah, coming from the other end of the scale is not to rack up any debt. I guess a lot of people who got married, certainly of my friends in my kind of background, have actually taken on debt to pay for the wedding.
Oh, wow.
Yeah, I'm definitely not
Balls.
going to do that. That's yeah, I mean, mainly it's not a sense of pride. It's not anything like that. I just think imagine starting your married life together, where the main thing that you or your main concern or the first thing you got to look at is in your bank you've now got a load of debt to pay for. It's
I
just
guess
like
it almost spoils the wedding as well.
it's
Like you don't want to have an
gotta
amazing
it's
day and
gotta
then look back at it and go, "Oh, it was a great day, but were it
but it was
really
just
worth
one day,
30
like,
G's?"
yeah. So I've essentially said, if we can't pay for it up front, I don't think it's worth it.
Yeah,
And that's the kind of riding principles for paying for that. um so yeah, this year I'm gonna have to bide my time. I'm gonna have to keep reading about money, reading about finance, educating myself. Yeah, time is money apparently. So if I do a lot of the upfront stuff this year, I will lose less time next year when I actually have some capital
yeah,
to put
play with.
towards that. Yeah, and I guess it
It's a
is.
classic thing, though,
It's
isn't it?
gonna be a
Garbage in,
long
garbage out.
process. Yeah,
If you do some research, do some background knowledge and stuff like
yeah.
that, like, yeah, it's not always going to be exactly to the T's the markets. Otherwise, everyone would be making money with regards to what you've read. But at least having some sort of foundations to work with will definitely put you in better stead than just going, oh, I've got 10K, let's go into the market and throw it in this company here because it looks good.
Well, that's the thing, isn't it? So there's 2 points there. There's a point that I read in a book that said how you treat and value money right now is how you will always treat it. So if I understand that um, my perception is to spend money, it doesn't matter how much money happens to me or how much money I come across in my life, I will always find a way to spend it. So whether
Mm.
I'm earning more or you inherit money or money just happens to you like you won the lottery. I don't know, but
Yeah,
it's something like 80% or 75% of lottery winners are bankrupt within 5 years. Like how? When you've got that much money, how? And
it's because it's 'cause they don't have the education, do they? Like you
it
said, you've
is.
not.
It's they don't know how. So all they do is they live within those means, and
Mm, mm,
whereas if you have a little bit of self-awareness that you put away a certain amount and anything, well, you need a certain amount to live, and anything
yeah,
extra you can invest. We try and do this the other way around, is to say, actually, I'm going to invest that much, and I'll figure out how to live on the rest. Like
yeah,
that's a better way of looking at it. So if you invest that chunk, that could allow you to live. I guess I mean that could put on your next three generations of your family if you wanted it to, if you won big enough.
yeah.
But
Well,
yeah, I
it's that
guess
classic saying, isn't it? I mean, you can if you take a billionaire and dump him in middle of you know broke and he's got to start again, chances are he'll find a way out to get back up to the top because he's got the experience and skills and he's got the knowledge of once you've done it once you can do it again. Whereas the
yeah.
people that win the lottery, they're like, oh,
Well, it's
what
yeah. I
time
guess
does the
it's
shops open?
I guess it's their education of money. It's how they value it. It's you know whatever happened, they found a way to spend it because that's how they've always treated it.
Mm,
Or and that's not what I'm trying to do. I'm trying to re-educate myself that by investing or you invest in businesses, stock shares, that's essentially investing in businesses. Or you can find other ways to do it, property, commodities. You could even try spread betting if you fancied your odds again, I guess. But again, it's all got to be backed by a little bit of knowledge. You
mm,
you said earlier you cannot go in blind. Like if you're going
yeah,
in blind, you might as well just giving it to
yeah.
someone else.
And and that's the thing, innit? You got to start off by you got to invest a lot of time, and once you start investing a lot of time, and things get easier, and you understand how it works, you have to invest less time
But the
into
money,
it
yeah, the
because
money
you
works
get as you
harder
get
for
better,
you.
like
Yeah.
yeah, that's what it is.
So, but you've got to be patient. I guess that's one of the other
Yeah, you
lessons
can't.
is
Yeah.
patience.
That's definitely one of the things we learned. You can't come in and throw it down and be like, right, why am I not rich by the end of the year? Like someone
Yeah.
told me that this was going to be the hot stock, and it's just not turned up. What's going on? I've been conned.
Yeah. So I guess we got quite a few lessons. A lot of them spill over into life, but we're certainly going to apply them to the money.
Yeah.
Um, I guess our plans for these conversations are to just hold each other accountable for what we're doing.
Mm.
It's quite easy to say, yeah, I'm going to do something this year, and then it just the entire year slides by and
It's
you've done
like I
very
say, it
little.
fizzes out, doesn't it? And you look
It
back at it and
does.
think, I've
Oh,
not.
that a little
Yeah.
waste of time. So we're going to do these chats at least weekly. Sometimes it'll be twice a week, and then we'll let you know if for whatever reason we're not doing one week. And yeah, I guess we're just going to talk about what books we're reading,
Mm.
what principles they have in there. We'll try
Yeah.
some book reviews along the way if we think there's any value in that. And
It's just basically, I think what we're trying to say is that this for us is a project with regards to mapping and recording our experiences that we
yeah.
learn whilst we try and navigate the world of investing, I guess.
Well,
And
the other thing is we haven't seen, or I haven't come across anyone that's doing this type of thing.
yeah, you often get people that have, they're giving you lectures or they're giving you talks about it, but they're not saying, this is me, I'm starting from scratch. Like sometimes you'll watch on YouTube, you'll see someone say, okay, well, I'm skinny, I've got nothing, no muscle on me. I'm going to start doing push-ups, 30 push-ups a day. This is my transformation. And they'll do a
Yeah,
video where it's like
yeah,
60 days and you'll see them grow like arms from there, just doing the push-ups every day. So I guess what we're trying to do is that equivalent, but with
finance.
finance.
Yeah, I guess the other point there is you've got the lecturers who are sat in a university talking about money theory, and it is
Mm.
very much theory. There's very little um, real action going on, and then at the other end of that spectrum, you've got the bullshitters. There's no other way to describe them, trying to sell you a
Yeah.
fast one to make you a rich millionaire, or I can make you 450 grand a week by whatever
And
new trend. It's just
it's crazy
shit.
how many
Yeah.
people fall for them schemes like pensioners, especially specifically like, oh yeah, if you switch to this pension scheme, you'll get 20% return on your money, and they'll do it, and they'll just give it to them, and then these guys will be like, oh, can't believe it,
Yeah.
and they'll do one, and it's just
Yeah.
yeah,
I
you
guess
gotta learn when it's too good to be true, aren't you? Essentially.
Yeah. So I guess we're trying to do some real money work and just show, I guess for us, for ourselves as well, over the years, we're going to learn more about what we're understanding, and we'll
Yeah.
we'll look back
What
on
we're
this and
about.
think, oh my God, I knew nothing back then.
Yeah, yeah. Look at these
So
dials thinking they know about money, talking
so
away like some sort of big shots.
yeah, but definitely that's the aim of these things, is to have a little bit of sense, a little bit of accountability. If anyone can provide good resources, be more than happy to
Hmm.
investigate. If you tell me to go buy a stock, I'll tell you where else to go. But yeah, I guess that's what we're aiming to do.
Yeah. So
I
this is
think
just
what
a
it's
this is
50,
ground based.
52 weeks in a year. I guess it's not that many videos. 52 hours out of a year is not a lot of time. We
No,
find we
no,
find it
it's not.
interesting anyway. It's not going to be a challenge for us. Most of our phone conversations when we call each other up end up on the topic of money. So this is
Money,
just
money,
our
money.
weekly catch
Let's
up.
make it rain. Weekly catch up, yeah.
Yeah.
Holding each other accountable to actually catch up with each other, as opposed
Yeah,
to, oh, I've not seen
again,
you in
yeah.
6 months, mate. We should probably see you.
Well, that's another point we didn't cover, is we used to be very close, as in driving distance to each other, and then over the
Yes.
past 3 years,
Well, I'm pretty sure I used to run to yours a couple of times.
yeah, you
That's
have,
like 6 miles.
yeah, definitely have. And yeah, over the last couple of years, due to work commitments and other commitments, we found ourselves at 200-mile stretches from each other. It's not that
Yeah, getting
convenient.
shafted by certain
Yeah,
companies.
so it is what it is.
But with the modern wonders of technology, it makes it so
Yeah,
much easier to just stop in with someone and have a conversation, doesn't it?
it does. It does. So yeah, hopefully next week we'll have some different
More of a
information on the
topic, yeah.
screen. But yeah, this is the general setup and general layout, and we'll build on it from there.
Yeah, cool. Been good, mate.
All right, man.
Production.
Well,
Yeah.
I'll close this stream down, and
Yep.
yeah, if you managed to catch any of this, thanks for watching, and we'll see you next time.